G'day, fools, and welcome back for 2022 to our flagship, our marquee series, our YouTube and podcast series, Motley Fool Stock of the Week, where every single Wednesday this year, we're going to bring you one of the stock recommendations behind the curtain. That's right, one of the premium recommendations from one of the Motley Fool services here in Australia. Why do we do it? We want to help you find great stocks. We want to help you understand a little bit more about the Motley Fool, the way we go about picking companies, and we want to introduce you to some of the Motley Fool investment team, because if you're going to join us, or if you already do join us, you're looking for more from our services, there's a little taster, a little bit from the inside to you, so you can see a little bit more about what goes on and how we do what we do, which has led, by the way, across the Motley Fool to many market-beating stock recommendations and some losers. As always, we're not going to hide from those, but this is our effort to share with you for free, capital F-R-E-E, something from the Motley Fool for you. So let's get into it in a minute. But before we do, I'm going to go through our regular, still back for 2022, reminders about how you should use Stock of the Week. Whether you're a regular listener or viewer, whether you're here for the first time, we want you to know this is a buy recommendation we're about to bring you. That's a buy recommendation right now in the middle of January 2022. It may change based on a whole lot of things. Circumstances, valuation, competition, value, anything, literally anything could change our view. Now, we're hoping to hold most of our buy recommendations for multiple years, not just weeks or months. So we're hopeful this won't change too quickly, but you need to know it's possible. And so this is a point in time recommendation. Secondly, speaking of which, we're not making recommendations for those days, weeks, or months ahead. We have no idea where these stocks are going to go in the next week or 2 or 5 or 10 or 25 or 52. We're not sure. We don't know. You can't know, we don't believe, where the share prices will move in the short term. But we're looking at businesses that we like for the long term and share prices we think are attractive over that long term. So if you're going to take the advice, we hope you will. If you're going to, then know that it's a long-term recommendation, not one we're saying is going to double next week. Lastly, back to that advice you might take, we can only give you general advice, of course, not personal advice. General advice means we can say we like company X. We can't say you, dear viewer or dear listener, should buy it personally, because we want you to make sure you understand how it fits with your risk tolerance, your circumstances, objectives, all the things that go with financial planning in general. We can't give that personal advice. We can only give you the general advice and ask you to consider how it suits your circumstances. Right, so that's out of the way. For the first time this year, welcome to Stock of the Week, Ed Vesely. How are you, mate?
Not too bad, Scott. It's been a good year so far, so I'm looking forward to discussing today's company idea.
As am I, mate. It's going to be a good one. Thank you for joining me. I really appreciate it. Look, the team do a great job of... This is not their core business, by the way, appearing on videos and podcasts. These guys are fantastic investors and business analysts. And so when they do spend some time to come on, I personally appreciate it. I know our viewers and our listeners do as well. Ed, we are going to talk about a business, and it's a business that on its face is pretty boring. Can I say boring? Is that okay? It's not something that's going to get the tech boffins excited. It's not one that's going to be in the front page of the AFR anytime soon, or maybe it is. I don't know. You can tell me. But it's a business that, like many other boring, or air quotes, boring businesses, can go on to be spectacular success stories. And of course, the business we're talking about this time is a little company called Supply Networks. SNL is the ASX ticker code. Actually, I should ask you to correct me first. Is it network or networks? Have I got it right or wrong?
Supply Network.
Oh, so close. All right. Supply Network, just singular. One network. You only need one, I suppose, if it's big enough. Mate, let's start by the way, this is a recommendation of the Motley Fool, so it's a current buy recommendation. Let's get that out as well. Tell us about, before we get into the investment case proper, tell us what Supply Network, no S, does, mate.
Yeah, for sure. And look, the ASX code is SNL, as you say. It doesn't stand for Saturday Night Live, so it's the exact opposite of that. It is pretty boring. So
Tuesday morning matinee, is that the Tuesday afternoon matinee? I don't know, something like that.
Yeah, look, you're talking truck parts and bus parts, and that's it. Right. We can go home now, pretty much.
Yeah, okay, good. Excellent.
But look, the company is a distributor for these replacement parts of road transport vehicles. So the company operates just in Australia and just in New Zealand. And as I say, they distribute and supply truck parts to customers. So you're talking about owners of fleets or even individual small business people that might own a prime mover. And so they come to Supply Network, especially if the truck is a fairly old truck. There's an aging fleet. I'll get into that in a moment. But they also, as I say, supply bus parts. And so specifically what they're doing is they're focusing on a niche, which is road registered vehicles of 4 tons plus gross vehicle mass. commercial vehicles, so they're not doing motor vehicles, motorbikes, or anything like that. It's just purely this niche here. And as well as supplying parts, it does actually add a lot of value to its customers through the determination of the right part, because a lot of these trucks and buses are incredibly complex these days. It was a few years ago, I actually went to a truck show just to show the kids really, all boys love big trucks. So, yeah, and I was just actually surprised by the amount of technology that goes into some of these prime movers.
Okay.
So they determine the right parts for the right job. They'll do whatever it takes for their customers. They work very closely with them to get their vehicles back on the roads. So they find the right parts, as I say. They manage the supply of these parts. I guess supply network is pretty descriptive of what it does. Mm-hmm. And they just try to solve whatever problems that the customers might come to them with, and try to to maintain those trucks and keep them and buses on the road. So in terms of how it sells, it's got a number of stores or branches around the country. It sells these under the Multi-Spares brand, and it's possible that some people watching this might have seen Multi-Spares in and around wherever they live. It's a growing network. Now, it's a very competitive market given the diversity of vehicle makes and models on the roads. But look, the company is actually competing very effectively and is growing its revenues very nicely, and I'll get into that in a moment as well. Just more broadly in describing the company, Australia accounts for 83% of its revenue, with New Zealand taking up the rest. And I think, look, the overall thesis for investing in Supply Network is the fact that heavy road transport, trucks and buses, for the foreseeable future are an essential service. At least that's the way I see it. So you could have, for example, suppliers of fruit and vegetables in one state trying to sell to another state, or to help out with the supply chain of Woolworths and Coles, for example. It's basically just moving food, freight, and whatever else has to be moved by truck that can't be moved by rail or by air effectively and efficiently. So really, that's I think the fact that trucks and buses are an incredibly essential service, and the public and major companies rely on these services to get their goods to market. So that in a couple of words is really what Supply Network does, and
Nice.
It's a pretty simple business, really.
I like it, mate. And I got to say too, I kind of laughed at the beginning about not being one of the stocks that's going to make the front pages or get the technical crowd excited, but it's actually really important to remember that you don't need that. Being a significant player in a profitable niche has been a wonderful wealth generation tool for a very, very long time for a whole lot of different people in a whole lot of different places, right? Just being really, really good in one very specific area. It needs to be big enough to grow into. It needs to be a good valuation, and we'll talk about that. But having, long-term compounding does not require Amazon size, I own shares in Amazon, or Apple size market sizes, market penetrations, or market opportunities to make some money. So let's go to the investment case, mate. You've alluded to that, and you've kind of already kind of talked about the fact that there is an ongoing need for what Supply Network does. I assume we're seeing growth. I assume we're seeing value. But take us through, when you look at Supply Network, you've described the business. As an investor, what excites you about Supply Network, mate?
Okay. Yeah, there's a few things, actually. Despite the simplicity of the business, it's actually very, very interesting when you go into the details. The company basically is stating that there's a few drivers for I guess the demand that's the company is enjoying, and I touched on the technologies that go into modern day trucks. They're very complex, and they're constantly evolving as well. So truck owners and fleet owners simply want to just keep their trucks on the road. They're not necessarily going to be experts in what parts are needed for which part of the engine and so on. So they're going to rely on the people at Multi-Spares to advise them on this, and to keep, I suppose, just maintain the reliability of their fleet. So there's evolving technology, the increasing number of vehicles on the road, the diversity of vehicles, and the parts complexity is surprisingly high. And the company, Supply Network itself, doesn't see any significant trend towards any consolidation in fleets in Australia. So I think that's actually going to be a very good thing. Now, just a moment ago, I touched on the vehicle age, and this is actually quite high right now, and it is actually increasing. And I just thought I'd just try to illustrate why the age of a vehicle or the age of a fleet is so important. Because if you're a small business owner, but you've got definitely a good business, and you can actually get goods to interstate or within states, but vast distances away from where the goods are produced, it's going to require a lot of upfront capital. And I just had a quick search online just before we recorded this, and I saw a 2012 Mack Prime Mover. So it's 10 years old almost. It had 761,000 kilometres on the odometer, and yet the asking price for this truck was $116,000 plus on roads.
Wow, there you go.
And I thought, yeah, that's a fair bit of money, and that doesn't include the trailer. That's just exactly. the engine, the cabin, right? The Prime Mover itself. Mm. And then if you're looking at newer models, even 2016 or 2017 models, you don't even get a price. You just get an invitation to come and talk, because
all right, okay.
You can imagine it's going to be fairly expensive. So
yeah.
It's estimated that Prime Movers will cost at least $200,000 plus, depending on what you're looking for. So whether you're a fleet, you might get a small discount if you're buying, say, a dozen or 20 trucks. But if you're only one or two, then the upfront cost is high. So therefore, you're going to really want to do everything you can to keep that truck on the road. And that obviously means just ensuring that you have the parts and you have the truck serviced. And the Motley Spares brand is obviously essential to ensuring that these truck parts get to the customers when they actually need them. So it's a bit like Bapcor in a way, but they focus on the niche of just trucks and just buses. So that's the reason why I think if you look at there's a chart there where in one of its recent presentations, you can see maybe in the first 5 years of a truck's life, say if they're bought new, sure, you might go back to Mack or you might go back to Kenworth and so on and get your parts and your servicing through them. But as warranties and so on wear off over time, and as you just constantly keeping those kilometres clicking over because you're keeping it on the road, then time will pass, and rather than going out and spending another $116,000 on a 10-year-old truck, you're probably going to want to keep that truck on the road and just maintain it and just pay whatever has to be paid to keep it reliably moving. So that's actually one of the theses for why I like the business, and it's some very good underlying demand there for its services. A competitive advantage too that the Supply Network has is its scale. It's been investing in itself for a long time now, and it's possible that anyone could come in and compete, but the investment in prior decades is actually making really good returns now for shareholders. So I'll touch on the returns in a minute and the valuation. But the other thing too is Supply Network. I've actually just gone through and checked the last 10 years of announcements. I haven't seen any major announcement where they've actually gone out and made an acquisition. What these guys are doing is they're just organically growing. They're looking to expand, I guess, the amount of use by each customer, but they're also moving to new geographies. They're opening up branches in new markets and new market segments. And they're opening up a new distribution centre in Melbourne. And this doesn't sound that exciting, but when you look at it, you've got a lot of costs which will come out of the fact that they're making these investments, and that's going to be added to the bottom line in future years. So I actually think they're so boring and just so under the radar. But the only thing that's not boring about this company are the returns. So the gross margins have been good, the net margins have been good. And the reason for that is I think it's not just a niche in truck and bus parts, but it's also operating at the quality end of the market. It is actually a very competitive space for parts. But I think Supply Network has done a good job of just maintaining really good relationships with its customers. As I say, it's operating at the quality end of the market. So that's important. You might actually have to pay more money for a part to keep that truck on the road. But if it means actually you can keep the truck on the road for a lot longer and it's not going to continue to break down, that's actually going to probably be cheaper in the long run. So the cheapest option up front may not be with Motley Spares, but it's probably going to be cheaper over the very long run. So I think that's the premise of why customers come back to Supply Networks. And I have to say, if you're going to look at the biggest expense of any small business operator or any operator that relies on a fleet of trucks, Scott, it's going to be if that truck is off the road and not earning its keep, it's costing a bomb. So you just got to keep them on the road, and that's what they're doing. And just finally, I'll just touch on the inside ownership too. The board of directors owns a collective 16% of the business, which is really high. And that's a stake worth just under $72 million at the current price, which was, last time I looked at, $11 per share.
Mate, I wonder if you could talk to us a little bit about valuation. You kind of mentioned that before. We've talked about the ongoing sort of moderate compound growth of the business. I assume you expect that to continue. I assume it's available for a price that allows that to continue. Can you just touch on why we think it's an attractive time and price to buy what is obviously a quality business now?
Yeah, look, if you looked at the share price, you'd think it's actually trading at all-time highs. So You're thinking, why am I even talking about something that's trading? Look, it's got to be expensive, right? Because it's gone up so much. But, actually, when I go through the numbers, I'll start, I suppose, with the averages over the last 10 years. Between 11, 12 and 15, 16, net profit increased moderately. So it was around a compound annual growth rate of around 4%. So that went from 4 million to about 4.8 million. But I think the investments that the company has made in the last decade, and especially in the last, say, 6 to 12 years, a lot of that investment is starting to bear fruit, so to speak. So in the 5 years after that, from 16, 17 up to the most recent financial year, 2021, net profit actually increased by from 6.8 million to just under $14 million. And that last year was a pretty good year. I'll go into that in a second, but that's a compound annual growth rate of 15%. So that's increased from 4% to 15%. It's really accelerated. And so when we look at the valuation, yes, the multiple was actually increased. And instead of there being an average of, say, let me just get the figures here. I've got them up in front of me. The 10-year average for the earnings multiple on Supply Network is around 18 times. The 5-year average is around 23 times. And yet if we look at the really good results from last year and the $11 share price, and just looking at the number of shares that are out there in the wild, you've got it's about 33.9 cents per share, and that provides a multiple right now of 32 times. So you'd think, okay, well, that's really expensive. But what you've got to do is look into the reliability of its announcements and its forecasts for the future. Now, I don't necessarily love, Scott, companies that come out and say, oh, we think net profit's going to be whatever in 6 months' time.
I'm with you on that one.
Yeah, you have. But look, with Supply Network too, you've got a management team that have actually done this consistently every January, I guess, and they've actually always been pretty much on the mark because they have a really good understanding of their business and what drives the business. So what they're saying is that, well, first of all, when I look at the 2021 year, they had a fantastic year. So they saw revenue grow 19% to $163 million. Net profit actually increased 45% to just under 14 million, as I said. And on a per share basis, that's the same because they're not issuing new shares. That's another important factor of its capital base. They grew also 45%. And so when you look at this fantastic year, it looks really reasonably expensive at 32 times, but their recent announcement forecast for FY22 is that they're expecting a very good first half, which is coming up. We'll get the results on that in February. But for the full year, they're expecting revenue to come in around 190 to $195 million and net profit to come in around $19 million. Now, if they hit that mark and they put the name on it, basically. Now, let's just remember too that last year, at the end of June, they reported net profits of just under 14 million, and yet that's going to $19 million by the end of June this year. So if they achieve that, and I look at the forward multiple, I think we do have some justification to trust the numbers in this case, Scott. It's actually trading right on its 5-year average of 23 times earnings. So is it cheap? No, I think it was really cheap prior to the run it's had in the last 18 months. And this is despite the disruptions to the business through COVID and so on. And I'll talk about the risks in a minute. But it's a company that's actually I think trading, it's not necessarily cheap, as I say, but it's not expensive. It's trading in line probably where it is. And there's that old adage, Scott, where the market is let me just get this right. The market is a voting machine in the short term, but it's a weighing machine in the long term. And I think this stock price is being appropriately weighed right now. So it remains a buy on the scorecard at Dividend Investor. And this is despite the 1.8% yield. It's come right down because the price has gone up. But with the sorts of results that we can hopefully expect for 2022, what can I say? It's not looking as expensive as it might appear at first glance.
Beautiful, mate. Love it. That's a great summary. And a business obviously hitting its straps and shelves are being rewarded, which is, as you say, what you would expect and what you want. So let's go to those risks you've already kind of just referred to just previously, because every business has its risks, and we always want to make sure at the Motley Fool, every single recommendation we've ever done, I think probably in the Fool globally, certainly here in Australia, we've always included a risks section because we want to make sure that our members know that if you're buying a recommendation, we understand there are risks. Nothing is risk-free. So we're saying every time we make a recommendation, we think the upside is well and truly larger than the downside risk. We'll be wrong sometimes. Sometimes those risks will actually come to pass. But we want to make sure that our members know those risks exist. And so when we take a stock of the week to our YouTube channel and, of course, to our podcast, we want to make sure that our listeners and viewers understand that as well. So let's go through the risks to an investment in a business like Supply, investment in Supply Network.
Okay, well, an obvious risk is something that has happened in the last 18 months. We've seen border closures in Australia, and there's been restrictions certainly in New Zealand. And so whilst there's underlying demand, in fact, it has not gone away, the demand for the needs for trucks on the road and buses as well, by the way, that if we were to see, well, we're not really seeing lockdowns now, but we're seeing very strong encouragement, I guess, by governments to stay at home and not try to spread the virus that's out there in the community. And of course, you've got workforces and so on, which are being asked to stay away because of concerns over the virus. And of course, that affects operations at suppliers of fruit and veg or manufacturing or whatever it might be. So there's that. And then, of course, that affects, at least in the short term, the underlying demand for the movement for goods wherever they've got to go. So, but, we've actually seen this in real time in the last 18 months, 2 years, where it has been affected. And in particular, the bus part of the business, the bus segment, the parts, the demand for parts is temporarily dried up because there were just fewer buses on the road. And that makes sense because councils and governments were saying, right, well, we just can't have people moving around. So that's obviously a concern if it continues for an unreasonably length or amount of time. So it's not something I'm really worried about long term. I'm actually quite optimistic that we're going to get through this pandemic. I think we just have to be optimists. I want to be an optimist, but there's going to be a lot of ups and downs with this sort of thing, and there could be more disruptions, and there could be disruptions to the company which affects the company's forecasts. So there's that. But of course, just coming back to more mundane things, there is some supply risk in terms of it's got to get the parts into Australia. So there's that supply chain risk. From what I've read, the supply chain risks that we're talking about here are caused by growth. So, I mean, that's a great thing, but I think it's just going to take time for manufacturers of parts and other goods to catch up and get those supply chains moving. But the company assures its shareholders that it's actually quite expert at managing this, and I've got no reason to disbelieve that. But it's still something you've got to keep an eye on. And of course, you've got just the pressure of pricing, which it has to pass on in a very competitive environment still. So despite it doing very well, it still has to compete, and it's still got to be effective on price. It's got to be effective on service, and of course, just keeping customers happy with parts that can be timely, because it's so essential for trucks to be on and buses to be on the road. So there's those risks. And of course, if you had any of the senior management leave for whatever reason, there'd be a big gap there in the amount of, I suppose, commercial and business knowledge of the company. It's not just easy just to, I suppose, appoint someone from outside of the business. I really like the fact that the directors themselves own a big chunk of the business. They've been there for quite a while now, and I think if you see any sudden movement at the top of the business, that might be a concern as well. Now, especially, I talked about price. The price to me is reasonable. I wouldn't say it's cheap, but it's certainly not expensive. But you could just also have finally, so this is the final risk, I guess, just in the very short term. We've got choppy markets at the moment. You could find that for no reason other than the markets are volatile, the price could fall, down below $10, or it could fall 15, 20% in a very short space of time. But that would be fantastic, because it just means a better value on offer. But look, it's a company that's trading at all-time highs. That in itself could be considered a risk. But I think for a company that's actually doing everything it's supposed to be doing and growing, and still has a plan to reach $250 million in revenue in the next 3-year plus period, and its investments in distribution as well, I think there's more growth coming, and it still remains very under the radar. So, there's a few risks there, but I think there's a lot of those risks can be offset just by the quality of the management team and the quality of the services that Supply Network provides.
Very nice, mate. Very nicely put. Before we get you to wrap the whole thing up, just a reminder, you can get more from the Motley Fool in all the usual places. But let's kick it off. If you're listening to this on podcast, make sure you go to our YouTube channel. We have a YouTube channel. Just go to YouTube, search for The Motley Fool Australia. You can go straight to youtube.com/c/FoolAU. I believe C stands for channel, if that helps you remember it. So /C/FoolAU, or just literally go to the YouTube homepage and look for The Motley Fool Australia. You'll find us there. If you're already on YouTube and you want to check out some of the podcasts, we do two. We do Motley Fool Money, and we do The Good Oil with Scott Phillips. Both great podcasts, both, I think, worth your time and effort. And of course, if you're only listening to one of those podcasts right now, check the other one out. They're pretty good. And of course, you can see us on all the usual social platforms. Facebook, we're at The Motley Fool Australia, or I'm at Scott Phillips Money. You can grab us on Twitter. You on Twitter yet, Ed? Am I flagging your Twitter account, or are you keeping that on the download?
Not yet.
Not yet. So it's just The Motley Fool AU on both Twitter and Instagram, or you can get me at TMF Scott P on Twitter and Insta as well. Do check all those out, because, I said they're free. free value from the Motley Fool straight to your, inbox or YouTube screen or Twitter handle, whatever you're doing with it. We are there and there to share some content with you. All right, mate, let's get back to Supply Network. No S, I've learnt my lesson. Let's wrap it up, mate. The 60-second elevator pitch as we go from the first to the 31st floor. Why should our viewers and listeners consider buying shares in Supply Network?
Okay, well, first of all, Supply Network is a company that really does focus on a niche. So it's not trying to be everything to everyone. It's focusing purely on truck parts and bus parts. It's enjoying good margins. It's enjoying also I suppose the benefits of a high and increasing vehicle age, which is certainly going to be a driver for demand for its services in the years ahead. Because it operates at the quality end of the market, it's maintaining very good relationships with the vast bulk of its customers. Its recent earnings results have been excellent, and it is expected to be more for the 2022 financial year. And finally, you've got a 1.8% dividend yield, which I think can grow this year in line with its expected performance. I don't see the shares also as necessarily very expensive. I think they're more than reasonably priced for the sorts of performances it's delivering for shareholders.
A beautiful summary. Ed, thank you for sharing your time with our viewers and listeners. Viewers and listeners, thank you for spending some time with us. We know there's plenty of places you could be spending some time, so we appreciate you checking in on our Stock of the Week episode, wherever you're watching or listening to this. Until next time, from Ed, myself, and the whole Motley Fool team, Fool on.